Hi all, this is Dr. A. Benazir, Assistant Professor of Commerce, Sadakatullah College. Have you ever wondered what keeps our economy moving? How do business gets money to grow? Or where your savings go when you deposit them in a bank? Welcome to this module on Introduction to Banking System in India. Here we are going to explore the backbone of the nation's financial structure.
Well, let's start with something we often take for granted, the bank. What is a bank really? Is it just a building where you keep your money safe? Or is there more to the story? Yes, bank is a financial institution that accepts deposits from the public and lends money. But banks do more than just handle money. They build trust, support businesses, and fuel economic development. In India, bank operates under a structured and regulated system to ensure safety, transparency, and growth. It is important to understand how the banking system is structured as a whole. Every country has a banking framework made up of various types of institutions, each serving a specific role from managing the economy at the top level to offering loans and savings accounts at the local level. The Indian banking system is broadly classified into two main categories. One is scheduled banks and next one is non-scheduled banks. Among the scheduled banks, we have commercial bank, cooperative banks, regional rural banks and development banks. Let's see it one by one. First comes the commercial bank. The commercial bank is a type of financial institution that accepts deposits from the public and provides loans to the individual and businesses from profit. The next one is the cooperative bank. A cooperative bank is a member owned financial institution that operates on the principles of cooperation, mutual help, and democratic decision making. It provides banking services mainly to its members, who are both the customer and owners of the bank. Third is Regional Rural Bank. It is a type of bank in India that was created to provide banking and credit services to rural areas, especially to the farmers, small businesses, and rural poor communities. And finally, we have development banks. It is a financial institution that provides long term capital for economic development projects, especially in the areas like infrastructure, industry, agriculture, and social development. Unlike commercial banks, the development banks do not focus on short term profit, but rather on supporting national growth. Banks are the heart of the financial system. They perform two main categories of functions that support individuals, businesses, and the economy at large. The functions are broadly classified into primary functions and secondary functions. Let's explain the primary function. Primary functions are the core activities of the banks, the services that define their basic role in the economy. The first primary function is accepting deposits. The banks accept money from the public in various types of accounts such as saving account, current account, fixed deposit and recurring deposits. Saving account encourages savings while offering interest. The current account is used by business for frequent transaction. The fixed deposit and recurring deposit offer higher interest for locking in money for certain period. These deposits form the foundation of a bank lending capacity. The second primary function is granting loans and advances. The banks lend money to individuals, businesses, and institutions for various purposes. For personal loan, home loan, education loan, business loans, and working capital finance, overdrafts, and cash credit facilities. Lending earns interest income for a bank and help to promote economic activities. Now let's move on to the secondary functions. These services support the customers beyond basic deposits and lending, enhancing convenience and financial planning. The first secondary function is fund transfer. Banks facilitate electronic transfer of money. NEFT, that is National Electronic Fund Transfer, and RTGS, that is real-time gross settlement for account-to-account transfers, and UPI, that is Unified Payment Interface. It is allow instant transfers using mobile apps like Google Pay and PhonePe. The secondary function is investment services. Many banks offer demat and trading accounts and mutual fund investment, tax saving instruments and insurance. These help customers grow and manage their wealth. And third function is locker facilities. Banks provide safe deposit locker to keep valuables like documents, jewelry and certificates to secure it. And the final secondary function is credit debit card services. The banks issues cards that help the customers spend conveniently. Debit cards draw directly from a bank account. Credit cards offer short-term credit with rewards and purchase protection. With the rise of digital banking, most of these services are now available through mobile apps and internet banking platforms, making banking faster, safer, and more convenient. Banks are not just places to store money, they are financial partners that offer services tailored to meet both personal and professional needs. Whether it's sending money instantly, securing your valuables, or growing your wealth, banks are there to support you. Here comes the types of commercial banks. Commercial banks in India play a major role in the financial system and serve a broad range of clients from individual to corporation. They are further divided into several categories based on ownership and target audience. First one is public sector banks. These banks are majoritarily owned by governments of India. They have the largest branch network and serve a large portion of rural and semi-urban population. The second one is private sector banks. They are owned by private entities or individuals. They are known for advanced technology, customer service and innovation. The third one is foreign banks. These are international banks that operate in India through branches. They typically serve urban customers, corporates, and high net worth individuals. Finally, regional rural banks. They are created to serve rural areas and promote financial inclusion. They are jointly owned by central government, state government, and sponsor banks. They primarily focus on agriculture and small scale lending. India's banking sector is undergoing a digital revolution, transforming how financial services are delivered. The first recent trend is digital banking and UPI. Unified Payment Interface allows instant and round-the-clock money transfers using mobile phones. Apps like Google Pay, PhonePe, and Paytm have revolutionized everyday payments. Second one is FinTech integration. Financial technology startups are partnering with banks to offer better user experiences, faster services, and personalized financial products. Third one is artificial intelligence, that is AI. AI helps banks to analyze customer behavior, detect frauds, and to offer chatbots. The fourth one is blockchain technology. It improves security, and transparency in banking transaction and record keeping. Finally, is neobanks. Neobanks are fully digital banks with no physical branches, offering services via mobile or web apps. Despite growth and modernization, Indian banks faces several pressing issues. The first and foremost challenge is non-performing assets, that is NPAs. Loans that are not repaid on time becomes NPAs. High level of NPAs reduce bank profitability and investor confidence. Reforms like the Insolvency and Bankruptcy Code are addressing this issue. The second challenge is cyber security threats. With increasing digitalization, cyber attacks and online fraud have become serious risks. Banks are investing in robust IT infrastructure and data security systems to avoid cyber threats. Third challenge is low financial literacy. Many people, especially in rural areas, lack basic financial knowledge. This limits their use of formal banking services. And the fourth challenge is rural banking challenge. Limited infrastructure and connectivity, and the shortage of trained personnel and lower penetration of digital banking services is a great challenge. And finally, regulatory compliance. Frequent change in policies and reporting requirements pose challenges for banks, especially small ones.
Indian banking system is a vast and evolving network that supports savings, investment, businesses, and innovations. A sound understanding of this system is vital for anyone aspiring to work in finance, economics, public policy, or even simply to manage their own money. Thank you for watching this video.